Next stock, let's take a look at here is PACCAR. Now, PACCAR, you may not recognize that name, but they are the big truck maker. They make Kenworth and Peterbilt trucks, and this is one we actually held in the portfolio years ago. I loved this company. I thought it was a great business to hold, and just very I'm going to say well respected by most in the industry. The reason they're interesting here is shares had a nice pop on Friday. Looks like they're up about 5%. President Trump did announce that he will impose a 25% tariff on imported heavy trucks. He did say in the post that large truck company manufacturers such as Peterbilt, Kenworth, Freightliner, Mack Trucks, and others will be protected from the onslaught of outside interruptions. So the reason this could be beneficial for PACCAR, obviously, is less competition coming in and trying to undercut the prices. So it gives them potentially more protection around their margins, let's say, being that U.S. business.
Yeah, I mean, great business. Been around for a really long time. Started in 1905 making rail cars, kind of pivoted after World War II. Now, if you look at truckers with those brands, Peterbilt, that's one that's very common. That you see
them on the road all the time.
Yeah.
I'd say you see those. I mean, you see the Mack trucks as well, but if you actually look at a lot of trucks, when we held it, I always look and I'm like, oh, most of them that you see are Kenworth or Peterbilt, I feel like.
Before, when I was studying for the CFP, I worked at this little financing company, and we were repossessing all of these trucks out in North Dakota, and they were all like truckers, and they were all PACCAR cars. I did that for a few months.
This was about 11 years ago, 10 years.
Yeah, about a little over 10 years ago. Yeah.
Got to start somewhere.
Yeah, I was an accounts receivable manager, calling people, and they do things differently in North Dakota. I'll say that.
Well, let's take the numbers here for PACCAR. The price to earnings for the business, 17.2. That is below the industry average of 20. Price to sales, 1.7. Industry average here, 1.4. Price to tangible book value, 2.8. That is favorable compared to the industry average of 12.3. And price to cash flow at 11.8. Also looks good against the industry average of 12.4. Looks like the company did run into a little bit of a hurdle in terms of earnings per share. It was down about 38% compared to last year. I'd be curious as to what happened. Their sales did decline 11%. So much has been a slow industry for truck sales over the last year. And many times if you have high fixed expenses, it can really accentuate the downturns in earnings per share. But again, a 38% decline, I'd want to have a better understanding of what the heck happened there. Dividends, 1.3%. The interesting thing I remember about this company, though, is they pay an annual special dividend. So I believe that forward yield of 1.3 is based off the quarterly payment, not the annual payment as a part of that. So dividend yield could be even more attractive, maybe around 2-3%, depending on how big that annual dividend payment is. Balance sheet's always a little bit weird with PACCAR. Current ratio is 3, debt to equity is 0.8. They do financing on a lot of their trucks, so it could distort how that balance sheet actually looks. The actual debt for the business, as I remember from years ago, was actually very, very solid. So if things haven't changed, the balance sheet was very clean for PACCAR a few years ago. Look at the current price for the business. Their ticker symbol, again, PCAR, $100.50. 52-week low here, $84.65, and the high, $118.81. I'm going to say going forward, this company, it looks okay. Go out to December 2026, estimated earnings per share, $6.29. Gives us a target sell price of $126.16. That forward PE multiple is around 15 and a half. So it doesn't give us quite our 30% margin of safety on it.
It's about fairly valued, I'd say.
It's about fairly valued. We still got about, I'll call it 15-20% growth on that stock. So it would be in our hold category. If we got a pullback on this business, though, I definitely think it'd be one worth evaluating. I think it's a good business, especially if you can pick it up at a good valuation.
Yeah, I mean, in April, it got down to the 80s. So that potentially would have been an opportunity. But, I mean, earlier in the year, it was up 112 and then went down to 88 in April when everything went down, and then since then it's kind of just been chugging along up back to 100 now.
Yeah, so I mean this one, as I said, I'd bottom line, I'd give it a hold rating if I was a stock analyst.
What you are.
The Wall Street guys that say buy, sell, or hold, I'd give it a hold.